And welcome back to the Buckle Up Podcast universe with Brandon Rush and Mama Rush. Just want to give you all a quick update that we are in 74 countries and 804 cities around the world. We're very excited that we are doing so well, and that's thanks to all the lovely guests that we have on here that have made the show special and our listeners around the world. So we appreciate you. Today, we're going to have one of my really good friends on here from Vancouver, Christian Anthony, who some of you all know from my social media. But if not, you're going to get a chance to meet him today. Just want to give you guys some background into Christian Anthony. Christian was born in Vancouver, British Columbia. He is of Scottish and Filipino parents descent. He has 3 brothers and 1 sister. He went to high school at West Point Gray Academy, where he captained the basketball and soccer team. He had a partial academic scholarship to Gonzaga University, where he spent 4 years and graduated. He had a few job offers after graduating uni, and he took an equity research associate role at GMP Securities in Calgary, covering oil and gas. After 4 years in that role, he had 2 job offers, an equity research role at the National Bank in Calgary, and an investment. And it's sorry, that's actually Christian right there. After 4 years in that role, he had 2 job offers and an equity research role at National Bank in Calgary and an investment analyst role at Phillips Hager and North in Vancouver. He took the Phillips Hager and North role in Vancouver to better learn investing. After 3 years at PH&N, he left to join a startup investment firm, Pathfinder Pathfinder Asset Management. I was messed up there. I apologize. Where he started a hedge fund. He has been there for 13 years, and the fund has delivered a top 10 sharp ratio of all hedge funds in Canada the last 4 years. He also enjoys playing golf. Golf is his main sport. He also played basketball. So I'm about to let Christian in on here. Let me double check. I think he wrote me that, I will send him right now. You can join, brother. All right. Let's see here. Boom. Bam. All right, just waiting for him to pop up. Make sure that I have my voice recording going more. In the meantime, while we wait, if you were interested in being on a guest on the Buckle Up Podcast universe, you can feel free to reach out to us either on my social media handles, which are Brandon Rush, which is BRANDONRUSHH, or from our Buckle Up Podcast page, which is BUCKLEPODCAST, Buckle Up Podcast Instagram page. And let me see here. Christian should be coming along any second now. Christian, my man.
Hey, Brandon, how are you?
Doing good, brother. How about yourself?
I'm doing well. I'm glad we finally got to do this.
Man, I am too. I'm so excited to have you on here today. Christian, my mom's here too. She's just using her picture.
Rush. Nice to meet you.
Hey, Christian, this is Mama Rush this morning. How are you?
I'm having a great morning. Happy to be here.
Oh, great.
Absolutely. Well, Christian, I just started the recording. Today it is, first off, welcome to the Buckle Up Podcast universe with Brandon Rush and
Mama Rush.
And we're excited to have Christian Anthony on here today. Christian, it is all about you. I read off your mini bio, but I want you to tell us firsthand so the audience can hear it from you. Man, it's all you. Start from the beginning.
I grew up, I was born and raised in Vancouver, British Columbia. A Scottish dad and a Filipino Chinese mom. It was a pretty disciplined upbringing. Kind of my mom ran the household, and as in like the Asian culture, the eldest is setting the precedent for the entire family. So I was the eldest in my family.
Oh, okay.
My mom was the eldest in her family, and her mom, my Lola, was the eldest in her family. So it was very disciplined. A lot of had to do a lot of things like kumon, which is like Japanese math, speech arts, all the sports, piano, guitar. So it was, I would have a very regimented schedule, and it was good discipline. Caused me to rebel a little bit eventually, but And then I eventually, for university, I went to Gonzaga University. And eventually through there, that's where I found finance and declared my major in business and finance, and was lucky enough to have a good initial career job opportunity in Calgary, and kind of that compounded into starting a fund and a firm in Pathfinder Asset Management that I still work at today.
Okay, Christian, you hit a couple things there that I definitely want to ask you about. And then I know first off, you're also you're a sports guy too.
Yeah, I grew up playing all the sports. I was the captain of our high school basketball and soccer team, but I also played a bit of volleyball, rugby, golf. Golf's my main now.
Yeah.
And in university, I tried out for the Gonzaga basketball team and didn't quite make it. But when they were short players for practice with injury and stuff, they would have me come in and practice with them a few times, and so you got to practice with some like NBA guys and stuff, which is pretty cool.
Absolutely. Christian, where did this kind of well, actually you kind of said it earlier, but I just want to touch back on it. This kind of competitive nature from you, does that come from being the eldest in your family? Like, do you think with you going into like sports and all that?
Yeah, I think it's also having a brother that was a year and 3 months younger than me that was really athletic and ended up being a pro basketball player, and him and I growing up butting heads and competing on everything. So give a shout out to my brother Sean, and that really drove the competitive spirit, which I think you need to have in the investment industry, because it is probably very closely related to sports, where there's a scoreboard in terms of performance, assets under management, and everything like that. So it's very objective how you perform in the business, kind of like a sport where you have statistics. And if you're not competitive and don't want to excel in those statistics, it's not a good career to pursue.
Okay. Well, Christian, one thing I got to say, Mom, you don't, obviously I've seen Christian for several years. We always hang out in Arizona. This man is one of the most competitive people I've ever either had to compete against or be on the same team as. So,
wow.
But I'm a gentleman, and I'm nice while doing it. I'm not like a trash talker. Really.
Oh yeah, no. He lets the sport do the talking for him.
Well, when I hear you say Gonzagas, is that how you pronounce it?
Gonzaga, yes.
Gonzaga. I always laugh because Jimmy Kimmel has a way of, he said, is that a real university? He always makes jokes and everything, but you all have won, your school, your university won many conferences. And I think, yeah.
We made the national championship game twice. In fact, our first national championship game, we beat a school called South Carolina. The semifinals to advance. And I think Brandon and I were there. It was a really good game. And that was actually in Arizona. That was 2017. Okay. So I took my mom to the national championship game. I said it was a fair trade, 4 years tuition for a national championship ticket.
Hey, absolutely, man. Absolutely.
Well, that's so great to hear, because I was looking at your team and I said, they won a lot of their own personal conferences. I think 27. Do you all hold a record for the WCC?
I think we do, yes. But this is our last year in the WCC. Next year we're joining the Pac-12, a newly formed Pac-12, and we got a pretty good team this year. I think we can make a run. I'm still a huge Zags fan, and especially in March, I get pretty into it. It's my most emotional time of the year.
Okay. Okay. Well, one thing, you're in hedge funds, and why did you choose hedge funds specifically instead of another path in finance?
Well, I guess interesting is how I found the most interesting story is how I found finance. So
go down, Christian.
When I went to university, you had to declare a major right away. I was just really happy to get out of the house, out of the the claws of my mom and all the curfews and all that. So I was, I didn't put much thought of it. And I just saw English as one of the majors. I said, okay, I speak English. How hard can it be? So I declared English as my major. And then I remember vividly, freshman year, I was sitting in a poetry class. And I was like, what am I doing? Because I'm not that artistic So I was like, I got to change majors. This is crazy. So then I went to journalism, which I did for a little bit, and I liked it, but I didn't love it. And I was looking at other things, and eventually there was a sports management major. And with my love for sports, I said, "Oh, I'll do that." And with that, you minor in business. And so that was kind of sophomore year I was in that. And so when I took my first economics and finance class, it really clicked to me. I really enjoyed it. I understood it kind of naturally, and that's when I declared that as my major. And even from that time, I knew I kind of wanted to be on the investment side of it. There's a lot of sides on finance, like you can on the brokerage side, which is more sales oriented. And through my life, I've made decisions. I can think of three forks in the road that really got me to starting the fund. I can go through those if you want, but
yes, please. Yeah, Christian, absolutely. Go down, man.
I guess the first was after university. My first career job, I had two job options. One was in Newport Beach at a fund of funds. And then one was in Calgary, Alberta, which was as an equity research associate for oil and gas. And at that time, Brendan, you'll remember from your acting, like the big shows were the OC and Laguna Beach. Like those are so like all my friends were like, "Oh, you can go to the Orange County and live it." But I said no. The Calgary opportunity, and for those who don't know, Calgary, Alberta is very cold and is kind of the inverse of Orange County. And I ended up taking the Calgary job over the Newport job because I thought it was a better platform to develop the financial skills and a better job overall. So that was kind of the first fork in the road where I think my relatives and older friends said, "Oh, you made the right decision, the wiser decision." But my direct friends, 21 years old, they're like, "Well, I can't believe you didn't go to Orange County." And then the second fork in the road was 4 years into my career. I had two options for a promotion in the job. One was actually to be a full energy analyst at National Bank in Calgary, and then one was to join the investment side at a firm called Phillips Hager North in Vancouver as an investment analyst. Now the National Bank job paid 5 times more than the investment job. But I ended up taking the investment job at Phillips Hager North than National Bank because I thought it would help me form investment skills better and I could learn from some really smart people instead of chasing kind of the quicker money where I was kind of be on my own. That was a decision a lot of people questioned because, the short-term monetary difference was so large, but with the long-term outlook, it actually helped me put me in a position to really learn investing from some really smart people that set the base for starting my fund in the future. So that was one fork in the road that I ended up making I believe a good long-term investment decision that was highly questioned at the time given the monetary difference there. And then the final fork in the road was 3 years into my Phillips Hager North job. I had a cushy job as a investment analyst, but it was pretty bureaucratic and I had a good, long, safe career there. But I knew I kind of wanted to start something and be an entrepreneur and start my own fund. So I branched off and joined a startup firm, Pathfinder Asset Management, and to start a fund. And it's extremely risky. We had basically no assets to raise, and I had no income at that time. Like I wouldn't be paid unless raised money and things like that. So I quit a very good, safe career to take a risk and start the fund. And it ended up working out pretty well, and I'm glad I made that decision. But those are the three forks in the road where if I had turned left instead of right on each one, I'd be in a completely different place.
Christian, first off, that is absolutely incredible. And when I was listening to that, like, it's just I'm beyond impressed. But I wanted to say, like, there's two things I heard. There's a quote that goes, "Whenever it's scariest to jump, that's when you leap." Is one thing, and then the other one is the famous one. I saw two forks in the road. I didn't know which way to go, and so I went the road least traveled. And to me, it sounds like you've gone the road least traveled, and you've done that on several occasions. First, you mentioned the fact that when all your friends your age are saying like, oh man, Orange County, we can go down there, especially Vancouver and all those places being cold or colder sometimes. That you could go down to Orange County, have a great time, have a blast in your 20s. But that was a decision that you made to go to Calgary, which is even at that early age for you to make that decision. Hey, instead of me going where I could have all the fun in the world, be around in California, I'm going to take the harder route. And I feel like a lot of times when people take the harder route, overall, it helps you level up because you're also testing your skills, but it's for you to be able to figure out the fact that, hey, I'm going to go this route. I think this is the way to go. And do you think personally, when you do this, is it you're listening to your faith or are you listening to just faith or gut? It could be both.
I think it was good at just investor principles at an early age, which I believe two of the most important investment principles is emotional control and having a long-term outlook. So on the first fork in the road, avoiding the glitz and glamour and having the emotional control to avoid that for going to the Iceland because it was a better career opportunity because the analysis was better. And then in the second one, avoiding the much higher monetary near term to set myself in a path for a better long term goal of mine, which was to start a fund. So I think those two investment principles are so important in investing, probably more than any analytical and intelligence skill. It's emotional control and a long-term outlook. And I was able to, even at an early age, I guess, have that mindset and perspective, which helped me make those decisions at that age. I think the second one was actually the toughest because it was 5 times the difference.
Absolutely. I mean, I got to give it to you, Christian. Some people will, to see like, hey, you can get paid this. This is what you can get paid right now, or you can go this route. And once again, you chose the tougher route. I mean, that's a testament to you, and that's a testament to your character too. Because a lot of people go for the instant grab or maybe the instant gratification of, hey, this is it. Like, I'm good here. But as a whole, you took a risk, and it was a risk, but it was a smart one. But you did it with the thought process that you use of.
To be clear, I'm not recommending that everyone follow that.
Oh yeah.
But in this circumstance, because I knew where I wanted to be long term, and I knew that opportunity would form the skills better to do it, and I think it turned out to be correct. But yeah, sometimes it's good to follow where the immediate conversation is.
Absolutely. Christian, will you do me one more favor for me? Would you explain, because we have age ranges of people all the way down to like 18 all the way up to 44, could you kind of explain what exactly a hedge fund is? I think that might be a thing too.
Yeah.
Sure. So a hedge fund is like a traditional investment fund where people pay you to invest their money for them. That's the main principle. The difference would be that a hedge fund can put on certain investments that benefit if the price of a security goes down through things like short selling or using derivative products like options and futures and things. I won't get into those detailed. But and then hedge funds can also take on leverage, so they can, if there's say 100 million in the fund, they can borrow money and invest 150 million up to like 500 million. Some hedge funds will really lever up. And then hedge funds also charge a performance fee alongside the management fee. So a part of the profits that go to the investors are kept by the investment manager. So those are the main differences. But in the end, it's actually very similar. And I think hedge funds, there's this perception that, if you have the opportunity to invest in a hedge fund, you've hit the jackpot, and it's just this like secret recipe to huge investment returns. It's actually not true, because most hedge funds blow up because you take on leverage and you do all these fancy derivative investments, and they blow up. You only hear about the ones that make it and have these great returns. You don't hear about all the ones that blow up because they blew up. They don't exist anymore. So hedge funds aren't necessarily a better investment vehicle. Actually, on average, they're probably worse because there could be higher fees. But if done properly, it's a very good investment opportunity.
Yeah.
Absolutely.
Well, Christian, I want to ask, I'm just going to say, Chris, I want to ask, what's the biggest misconception about hedge funds? that people have?
I think just that a hedge fund is just like the secret sauce. Like if you're invested in a hedge fund, it's going to do well automatically.
Okay.
Where a lot of times I think it's actually the opposite. There's a much higher failure likelihood within hedge funds. Hedge funds have the original hedge fund. Hedge is a word to reduce risk, and so originally it was like, okay, if you invest in a security and short a security, if the overall market goes up or down, you've actually hedged it because you're short one and long the other. That was the original idea behind it, was to reduce risk. However, because of the performance fee aspect, so many people started hedge funds to increase risk. So they would take on 5 times leverage and really increase the risk of the fund. And that's why there was a lot of blowups, excuse me. So I think those are the two misconceptions.
Okay. Okay.
Christian, what does a typical day look like for you? How does for a person that is in your field, what does that consist of, like, even with getting up and how your day plans out?
So typically I wake up at 5:30 or 6 a.m. And then I go through all the morning news. We have a series of brokers that send us all the investment news and economic news that have happened through the day. So I read through all that. Then our investment team has a morning call at 7:30. So we log on to that. And then I check the portfolio and see how securities are trading to see if there's any shifts we want to do. But my main job really every day is just researching businesses and potential opportunities. We're not a fund that is high turnover on trades. Like, a lot of people trying to play it like a video game.
Yeah.
We think of a stock is you're investing in a portion of a business. You have a percent ownership in the business. And most of my time is just trying to figure out what's that business worth. So what is our percent ownership of that business worth? And then you look at what that security is worth versus what you can buy or sell it for in the market, and you make decisions based on that. So that's my main role, is really just researching businesses and industry. It's more of a business analyst.
And then, Christian, one more question I had along those lines. With you getting up at 5:30, is that because of the different time zones that you're looking at too?
Yes, I guess the majority of investments we make are on North American exchanges, and the stock market opens up at 9:30 Eastern time, which on Pacific time would be 6:30. So waking up at 5:30 gives me an hour to read through everything going on, and then participate in the market hours. However, I don't actually, especially early in the career, I almost think investors would be better off not working during market hours, because the changes in the market day to day just they produce all these emotional responses that are unhealthy, and it's almost better to be researching businesses when you're not seeing the screen going up and down, and just really pretend every investment is private. And if this was a private home you were buying, or private, barbershop or grocery store on the side, what would you pay for it, kind of thing.
Okay. So you're doing that analysis in the morning. Do you, and this is just a question, with your research, do you go by instincts of what to do or risk controls? How do you factor all of those pieces in that research to come up with the right answers for that hedge fund?
So the most important is to really try and understand the industry and how that business fits within that industry. So does the industry have a moat? Is it going to be there for a long period of time? And then does the business that's participating in that industry have any competitive advantages versus different competitors? And what are those, and are those sustainable? So those are a lot of the things we're looking for. And also management. Are they good capital allocators? Are they going to operate the business well, spend money? What are their goals? Because that's very important as well. So meeting management is a big thing we do all the time to figure out, because sometimes you'll have a great business, but it can be done quite poorly.
Okay.
Christian, is it math, psychology, or instinct, do you think, that goes into what you're doing?
Psychology, I think, is the most important thing. So emotional control, I think, is the number one most important thing in investing, because if you have all the best analysis in the world, it doesn't matter if you listen to your emotions instead of your reason. So never let your emotions compromise your reason. And humans are really wired to be bad investors. They get excited when things go up in price and want to buy, and they get scared when things go down in price and want to sell. And to have the emotional control and psychology to look through that and have a long-term outlook, yeah, I think it's the most important thing.
Okay. That's why you're the Iceman, because when you fly, you're cool, calm, and collected.
Yeah.
Well, that's interesting, Christian, because when I'm thinking about these young professionals out there, I want to ask you, how should they understand things about money and decision making? Because you're young, you're in Brandon, and y'all are making these decisions day to day. But what advice would you give them?
I think really really read on some financial literature and accounting books, so you have an understanding of how capital markets work and how even just savings and debt works, and why not to carry too much credit card debt ever beyond the payment period. Those are very healthy things, like to understand how taxes work, and so you're never on the hook with taxes. So I just read. There's a lot of good literature, and this has nothing to do with the investment side, but just personal understanding of savings versus debt and how to manage those. I think it's so important. Taxes.
Okay.
Christian, this is actually one I thought of sometimes. Questions pop up. Who have been some of your mentors with? It could be in life, or it could be with work, whatever it is. Who have been some of the people that have been influential in your life?
In terms of reading and learning, people like Howard Marks, Benjamin Graham, Warren Buffett. I read a lot of their memos and books, and they all have a similar way of looking at things, and that's really on the investment side. Early in my career, Dan Tabucci at GMP Securities, he was my boss, my first job. He gave me the opportunity. He's now a client. He without him, I never would have had a foot in the door. I would have been in Orange County surfing or something. He was a mentor. And then at Phillips Hanger North, Doug Stadelman was a very wise investor, and I got to learn a lot from him in terms of how to invest and things like that. And then in my current firm, our CEO, sorry, Michael Rudd, and another of our fund managers, Rob Ballard and Adam Kim, very smart, wise people that you get to learn and communicate with every day and bounce ideas off and have counter perspective to your perspective. And those have all been very helpful.
Absolutely. And it sounds like you have a... Sorry, go ahead, Christian.
My mom.
Oh, yeah. No.
Without my mom, my mom researched. I remember when I graduated high school, she went through every university in North America, probably even a couple in Europe to see which would be the best fit. And she thought Gonzaga was, because it was smaller classes where I could learn, still had enough. She really wanted me to go to religious school, but she knew it wouldn't work if it was super, super religious. So she found Gonzaga, which was Jesuit, and really kept me on a path throughout my life. So if it wasn't for mom,
Wow, mamas are wonderful. I tell you, mamas and fathers, but mamas have that instinct to look at things. I think we look at you. I look at Brandon. I say, "Oh, Brandon, you're on the right track." Or, "Brandon, I have a suggestion." And it's so good when young people, as you and Brandon, are listening to your mothers and their advice, and also listen to others. But that's a great skills that you both have. And then you make that work in your life. But I want to ask you, how do you stay grounded when money and pressure are constantly in the room?
Oh, you can't hear? Oh, sorry.
Yes.
Can you repeat the question?
I said, did you hear me?
How do you stay grounded with volatility and all the...
No, grounded with, when money and pressure are constantly in the room.
Two things. One is, I think I have a good emotional control. Actually, it's funny, at our firm, we took personality tests that the Marines.
Oh, really?
So we understood each other and where you're coming from. And in terms of emotions, I was on the like 2% percentile of least emotional.
Oh, really?
The whole thing, which has hurt some of my relationships, but it's been good for my career.
Wow.
So I just naturally had emotional control. And then being so, I've now been almost 20 years in the industry. Every time you make an emotional decision, it usually ends up bad. So you keep learning from those mistakes, like experiences from mistakes. And so you get more and more regimented in the emotional control. And the second thing is analytically really trying to understand what you own, like the business you own, and what it's worth, and having conviction, having a highly convicted opinion of what it's worth. Because then volatility out there, all that noise, you look at it as opportunity instead of scared. Because if you know something's worth $10, it doesn't matter if it trades at 8 or 12 or what. That's all opportunity. But if you don't really know what it's worth, when it goes to 12 and goes to 8, that's when you get scared and everything. So having the conviction to believe in your analysis and what something's worth, combined with emotional control, can keep you cool when things are crazy.
Christian, if you ever decide to teach this, sounds like you'd have been great in the military, to be honest with you. But if you like,
I'm too nice for the military, I think.
Yeah, but if you ever decide to teach us, man, I think you can, because I like that you keep hitting on that emotional control thing, which, as I believe that people are emotional, I can be emotional at times, but to be able to do that in the manner that you're able to, you being that 2%, I think you said, that is, I think that's pretty incredible, almost a superpower that you have there that most people might not have.
And I'm probably, I've gotten more control again over that, because that was like 13 years ago when we took that test. But over time in this industry, in this business, if you're learning, you admit mistakes. Mistakes are a blessing because you can learn from them and gain experience, because experience is learning from mistakes. And a lot of those mistakes are when you make an emotional decision and not one based on reason. You can live with the ones based on reason. If you just got something wrong analytically or just dead wrong, you can learn from that as well. But a lot of times in investing, the mistakes are actually emotional based than
okay.
So Christian, with that said, how do you know to take on a certain client and then say, wait a minute, we can't take that client on? Do you ever go through that process?
That's a great question, because not only do you as an investment manager have to have that control, but you have to be able to educate your client. And a lot of times the greatest gift we can give a client is education. And so a lot of the things I've just said, we try and communicate to clients as well, because if you can have the control when things go down, but if the client doesn't, then they're going to sell at the wrong time and buy at the wrong time. So our firm is something we really hammer home with all the time is emotional control, and a lot of it too is, when things are going well, like our funds have had a great run the last kind of 5-6 years, and clients are like, well, should I take a second mortgage on my house so I can invest more? And we say, no, don't do that. Don't be chasing excitement. So it's not always like trying to calm people when things are down. It's, controlling excitement when things have been going well as well. I think, depending on the client, it's probably the most important service we provide is actually education. Most of it is psychology than analytical.
Absolutely.
But there's some clients there's some people that just shouldn't invest in anything that you can see the price trade every day, because some people are just too highly wired, and they're better off maybe buying real estate or just keeping in a safe, because even though those will do worse long term, their mental wiring would cause them to just, no matter what, make the wrong decisions at the wrong time. And so we've learned that there's certain clients that should just, we almost give that advice, like you shouldn't invest in something that you can see a daily price on.
Did it freeze up? Did it screen?
Oh, no. It's good, Mom.
Okay. All right.
Christian, I want to say that it sounds like, and we don't have to get fully into it, but I was saying, one of the things I appreciate about you all, just from hearing it sounds like you guys are very ethical in the fact that, I'm just saying that you care about your clients. Like I heard about
yeah.
you saying about the mortgage. I think that's a good thing just to have in general, because if you're trying to keep your clients from, hey, look, this is things are going well right now, and they can continue to go well, but don't make, once again, having that emotional control, what you're saying with the psychology of what you guys are doing, to be able to think about what you're think it through before, or just make an actual smart decision, because hey, you don't want to put anything that can put yourself in jeopardy too. So that's why I think it's amazing that you guys take that time to do that.
And one thing of our firm, our motto is equally invested. So everyone in our entire firm has to invest directly alongside clients in the same mandates, paying the same fees. There's no discounts for us. And a lot of times, even in some prior jobs, what we were managing and selling to clients was not what we would own ourselves. We would have our own private investment things. You're almost manufacturing a product for sale that you didn't really believe in. I won't get into the
you don't have to. You're good.
the science behind it, but a lot of the investment industry is that, where the person managing your money wouldn't actually invest in the product that you own. Whereas our firm, we have to, and we're directly alongside clients. And it should be industry standard, but it's unfortunately
Not
not.
always. Absolutely.
With that said, who's really, and I'm thinking about this, a hedge fund, who really is a hedge fund for? What type of person? What kind of monies are you looking at? Do they have to have a lot of money, a little bit of money, or how does that work? Because I've always wanted, and I think it's simple for everybody out there listening. Should I invest in a hedge fund? Should I invest in the T-bill or whatever? What do you think? Tell us what your thoughts are there.
Historically, hedge funds have been mainly available for institutions, so endowments and
Oh.
foundations and things like that. Recently, like our firm, we started hedge funds. Actually, the majority of our clients are not even high net worth individuals, just everyday individuals. And it's less, if you're going to invest in any type of equity-like mandate, whether it's a traditional mutual fund or a hedge fund or a segregated equity account. It has less to do with whether it's a hedge fund or a mutual fund or segregated. It has more to do with who's the management and team behind the investing, and do they have a good research process? Can they can they form a differentiated view on things that are important that turn out to be right? You're more looking at the investment team than the vehicle it's on. So it's more, okay, who's running it, not how that vehicle is formed.
Okay.
So with that question, the reason I'm asking, do you have a cutoff for how much money that person can bring to the table? Do they have to have so many thousands of dollars? And I know that's what listeners want to know, especially young people just getting started in life, and they get bonus checks quarterly or whatever, and they want to take their bonus check and use that instead of taking their bonus check and going surfing or
And that can be for
fishing games. So
An important discipline, I think, at an early age is to have some savings that have a long-term outlook. Because a lot of times people have savings like, oh, for a year, I need it in a year for a car or a vacation or something like that. You shouldn't invest in anything except a T-bill or a savings account at that point, because remember I said emotional control's most important, long-term outlook is the second most important. So if you can't have a long-term outlook with that savings, you shouldn't invest in anything that has price volatility. So I think an important discipline is to try and form long-term savings at an early age, even if it's a small amount, and investing those in some long-term vehicles. And so you start forming those habits of long-term savings, and then you can form the emotional control as things go up and down over time, and learn from mistakes. It's better to learn from mistakes at a younger age with small capital than when you're older and
that makes a lot of sense. Wow. But tell me one thing. This is interesting because my parents didn't do investments. They invested in their children. They invested in us. My parents had 6 kids, and they put their investments in us. And in turn, in their end of the life, we took care of them. We had caregivers go in there for them and take care of them. We never put them away in facilities. They were able, their last days, live in their home. And they said, we knew that our children happened to be a sure bet. And being in the South, from South Carolina, my parents, I tell everybody, they made the greatest investment of all in their kids. And I know some people don't see it that way, but they did. With me not having that knowledge, and I was glad I did take an economics class in college, but with you talking about your parents, did they invest when you were a young kid? Did they teach you some idea about how to go into making money? Chris, that's something I'd like to know. And I know our
No,
listeners will too.
I was the big help from my family. A big help was I was lucky enough that they had the financial means to give me the educational opportunities to develop knowledge and things like that. But my family didn't come from a investor background, except for my grandfather who did. But my direct family, my dad was a veterinarian. My mom was very smart, but she ended up having 5 kids and was a full-time mom. So investing didn't play a role early in terms of external, but they did invest a lot into their kids, like you did, Mama Rush. And I think a lot of what they invest in your kids has a lot of similarities to investing, where it's long-term outlook and things like that. Like, don't give the kid the car, right? Just keep them happy and mad, but give them the opportunity to make a means to buy the car, kind of thing.
That's correct.
And growing there. So I think there's a lot of similarities. I didn't learn, and I grew up personally, I was broke my whole childhood. I had no savings until probably my first career job. And so it didn't really, my first investing was in my senior year at Gonzaga. They had a investment class, and as part of it, a group got selected you would manage part of the university endowment, and then I was part of that group, and we invested there. That was my first direct investing.
Wow, that was excellent.
Wow, Chris, that we kind of got the itch for it. Was there a moment where it's like, oh man, I really like this?
I got the itch just learning about it actually early, and learning about finance and economics, and I actually knew basically after a few classes, my sophomore year of economics class, finance class, that this was what I wanted to do. And you can ask my friends, even when I was at GMP Securities, I was on what's called the brokerage side, the sales side of the financial industry. I knew I didn't want to be there long term. I was very focused on getting to what's called the buy side, which is the investment side, and making the decisions to ultimately get me there.
Okay. Christian, I want to make sure I don't want to hold you too much long, because I know you got stuff to do today, but I want to ask these. I have a series before I get to I have a lightning round questions I want to ask you. Mom, is there anything you have before I ask? I'm going to ask the lightning round yet. I have one thing to ask Christian first.
Yeah, I just want to ask this final question, and I'm looking at it. What's one money lesson? I think you hit on it earlier. You'd love to teach globally, especially to young people, because I remember I just heard you say, well, I was broke. When you're broke, were you happy? Sometimes you can have all the money in the world and you're not happy. So what would be that one money lesson? And I think you kind of said it earlier, but I would like to end with that on my part, especially to young people. What would you like to teach them globally? Because Brandon did say that.
I would hammer home again, emotional control and having a long-term outlook. I think it's so important, really in all aspects of life, but especially in investing. So if you invest in something, don't be fooled by the price changes, and don't make an emotional decision on that, and then be willing to own it for at least 5 years. Have a longer time period, because so many, I think, young people get into investing in a day trading type of thing. They see the market up and these ticks, and it's like I say, it's like a video game, and it's really the wrong perspective. And they invest, and they don't even know what the stock, what the business is behind it, and what's underlying it. So I think those two aspects, I think, are so important: emotional control and a long-term outlook.
And long-term outlook. I wrote that under your notes. Okay, long-term outlook. I love that.
Christian, if you could go back and tell your 18-year-old self anything, what would it be?
You know, from a career and personal perspective, I would actually say, like, kind of keep doing what you're doing. I think I had a good temperament and perspective early. What I would recommend myself, 18 years old, is to actually don't be so focused on your career and that you don't have some time for others. There's been a few, say, relationships in my life, girlfriends, where maybe I didn't prioritize them enough because of career ambitions. Typically, even some friendships. And you know, the older you get, the more you realize that wealth is more those friendships and relationships you have, rather than, you know, your balance sheet.
Okay. Christian, man, I love you, brother. You know that. So, all right. So this is just a lightning round. It's just quick. It's quick answers. I have about 16 of them, but they're really quick.
Okay.
One. Are you a morning person or night owl?
I think I was naturally a night owl, but I become a morning person through discipline.
Okay.
I'm a night owl, Christian.
Yeah. Biggest lesson money has taught you?
Emotional control.
Absolutely. One word that describes your approach to risk?
Emotional control and know what you own.
Okay. Best advice you've ever received?
Experience is learning from mistakes.
Ooh, nice. What is the worst advice you've ever received?
Stay and have one more drink.
I know that's right. Most interesting advice, the most interesting advice you've ever received?
Interesting. My first career job, Dan Taguchi told me, to make it in this industry, you have to be competitive, you have to really like money, but you have to be humble and be able to take insults, because early in your investment career, those jobs, you're treated worse than, like, you know, a dishwasher.
Yeah.
And so you have, and usually competitive people have a certain ego and mentality to them, but he was totally right. And it was an interesting advice he gave me. It was, you got to be able to take insults and be talked down to, because you got to be really thick-skinned. And man, so it's interesting and correct in terms of advice.
That's powerful, brother. That's absolutely powerful. I wasn't expecting that at all, but I just learned something. What book do you recommend that is not a finance book?
That is not. I haven't even. That is not a finance book.
Or it could be a finance book if you want. If you can't think of anything, it could be a finance book instead.
The Intelligent Investor.
Okay. Bad. Go ahead. Sorry, could you about to say something that I missed? I was making sure.
Yeah.
A habit that makes you better at your job.
A structure, a timeline structure of waking up and at a certain time and following a certain routine and process.
Okay. You coffee, tea, or neither?
Oh, coffee. Too much. Try.
Calm under pressure. Calm under pressure. Is that learned or is that natural?
Both, but it's mainly learned. But people are born with a certain temperament, and then you can from there shift based on life experiences. I would say, yeah.
All right. One mistake you learned the most from, and that could be anything.
I would say in the investment world, I was quite bearish oil through 2013, 2014. I thought I was going to get oversupplied. But in early 2015, there was a lot of startup oil companies that I knew the management teams, and I got excited and emotional about the opportunities, and I invested in some of those, even though analytically I didn't like the end product that they produced in oil at that time. And then oil ended up crashing in 2015, and we did very poorly on those investments. So it's a time where I made an investment based more on emotions than reason, and learned from it.
Absolutely. I can even tell by you saying emotional control and the things you've been saying.
Yeah.
So let's see here. A green flag in a business partner. What's a green flag in a business partner?
Humility, reason, and rationale.
Absolutely. A red flag that you never ignore.
Just very confident / cocky people who aren't willing to realize if and when they're wrong, and will anchor in their belief no matter what, even if all the evidence. That's another big investment risk, is if it's not what you don't know that gets you into trouble, it's what you know for sure that ain't so. That's a Mark Twain saying. And then
okay. You knocking things out the park.
But that's a big red flag. So people with too much ego that just have to be right and can't realize when they're wrong.
Man, that's talent you respect that people underestimate. So a talent that you respect that people underestimate.
People with a great short game in golf. It looks easy, but it's tough. People that can chip and just get it up and down every time.
In golf,
it looks easy, but it's not.
Absolutely. Christian, if you weren't in finance, what would you be doing if you weren't in finance?
That is a great question. I really have no idea. I've been so focused on it. Probably maybe in some sports capacity, whether it's it's hard for me to think of what